Hello traders, the title of the video is Mastering the Formation of WXY Elliott wave pattern one step at a time like a pro. Alright, so we have been recording videos about the WXY Elliott wave pattern recently. Alright, and I hope you are enjoying it, alright, like myself. Alright, but today we want to talk about mastering the formation of WXY Elliott wave pattern one step at a time like a pro. So what I'm talking about here, one step at a time, means that the pattern is not yet completed but is developing. All right, so it's going one step at a time. You see the W, then you're expecting the X, and then you are expecting the Y. As the pattern is maturing, all right, you want to trade it alone like a pro. So this is what we're about to discuss today, the formation of the WXY pattern, and most importantly, how do we trade it one step at a time as the pattern itself is developing one step at a time. Wouldn't it be good to know? Yes, it is good to know, all right? So the first thing that you will find is that you will probably, if you were here looking at this stock, Maxim Integrated Product Incorporated. This is another candidate component of the NASDAQ 100 belonging to the technology sector, the semiconductor. I'm speaking with my beautiful American accent. Semiconductor. Don't laugh, okay? All right. So if you are here trading the Maxim Integrated Products, okay, like myself, probably you'll call this one a W. Now you understand why I said the area of a coin is dynamic, one step at a time. So you see that this came down, blah 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 blah. So you may say, oh, okay, probably it's a zigzag. So what did I say to you? We say that for the zigzag, the most important thing when we talk about zigzag is the shape of the zigzag that is most important. So we can go into, okay, internal wave to find out what is he. Is he a W? Is he a zigzag? And so on. But the most important thing is that we have a shape of a zigzag. All right. Now the price is going up. You can see it going up now. So if you are like myself, which you are not, or if you are thinking like myself at this point in time, you may say, maybe you will end up being a W. It will end up being a WXY in your wave pattern. So at this point in time, you'll be thinking that probably X will be completed, and then we will have another, okay, move down that will form, okay, the Y wave. All right, yes or no? Right? Because it's not completed, the price can end up doing something completely different from what we are expecting. It may not be a it may not be a WSY, but in our mind, we are also preparing ourselves, okay, for the scenario where the price may end up printing, okay, a clear-cut neat, all right, a WXY wave pattern, and we want to trade it. All right, how do we handle that? So the first thing that you will do is that once you call this, so you are preparing for different scenario, not only for a WSY. Remember that. So you may say, all right, if this is going to be a WXY wave pattern. All right. We'll now start using what we call, okay, Fibonacci price action trading, or what we call price action Fibonacci trading. Do you know that? If you do not know, subscribe to dayprotrader.com and check that video about Fibonacci price action trading, because it helps us to focus the market also. So you will apply, the first thing that you will do, you'll apply Fibonacci retracement to the W, all right? And you will expect your X, the first resistance for the X, will be in a zone of 50% Fibonacci retracement level of the move from here to here. So the first stop, so to speak, the first expectation for the end of the X wave is here. That's where we are now. The 50% Fibonacci retracement level of the W. So right now, talking about trading it one step at a time, as the WSY wave pattern is being formed one step at a time, at this junction where we are exactly now, for the Maxim Integrated Product Incorporated, we'll be saying priority to bullish signal above $50.73 and priority to bearish signal below here. We'll be looking for bearish chart pattern in that zone. And if we want to buy, we allow it to break a bow and to retest and to give us a clear-cut indication that the price may continue to go up. That will be the first level that we must watch if we are thinking that this is likely to be a next wave. So if the price did stop at that 50% level, all right, and start pulling back, we will apply Fibonacci, okay, retracement for the price action from here to here. If the price find a resistance here, we'll call this one X. If it start coming down, we're expecting the Y. So the Y that we're expecting it to come down to the 61.8% Fibonacci retracement of the X, provided that the S is stopping here. So now let's apply the Fibonacci retracement, not extension, to that move from here to the 50% level. If we stop here, we'll be expecting, all right, the Y wave to stop right there, 61.8% Fibonacci, okay, retracement of the S somewhere here in the zone of $26. If stop here from the S, start going down, watch the level of $23 corresponding to the 61.8% Fibonacci retracement of the S. There's another level where the Y may stop, because if this is forming the Y, another stop point for the Y is right here, the beginning of the W, the end of the W. So the Y can come all the way here, forming a beautiful, okay, bullish chart pattern, which I don't want to call, all right, double bottom chart pattern here, all right, before going up. Either the Y may stop here at 61.8% level or come all the way here, one step at a time. Have I said before that we can use Fibonacci price action trading in conjunction with the WXY wave pattern? Have I said that it will be useful for somebody who is using a WXY wave pattern to also learn to master the Fibonacci price action trading? Yes, I did, okay? Now, the next scenario that can happen is that the X, hold on please. Another scenario will be that instead of the X stopping on the 50% level, it can continue to go up gently. I will mention them very fast to you. Instead of stopping at 50% level, you may go to the 78% Fibonacci retracement level of the W correction. So instead of the X stopping at 50% level, it can go even to the 78% Fibonacci, okay, retracement of the W here. If it breaks above this level and finds support, price comes to the 78% level, we will expect the X to end here, looking for bearish chart pattern, giving priority to bullish signal above and bearish signal below that 78% level. So the S, this price here, can continue to go out, and now if we find support above that pink line, we expect it to go up to this level. And this is another stopping point for the X, possible stopping point for the X. If it breaks above that 78% level, it can go up, okay, to the starting point of the W wave, bringing us to the top here. Those are the places that you need to watch when the X is developing, because the X is a potential trend. Until that trend has failed, we cannot call it X. But we want to know where are the level where the X may fail, or that potential trend may fail. The first level is the 50% Fibonacci retracement level of the W. The second level is the 78% Fibonacci retracement level of the W, or, all right, the 100% Fibonacci, okay, the beginning of the W wave. That's another place. It can go above this high here. The next level for the S will be the 138.2% Fibonacci extension level of this prior trend. So you apply Fibonacci extension to the prior trend, and you highlight the 138.2% Fibonacci extension level of that trend. If it breaks above, okay, this resistance right here. So those are the scenarios that can happen as the pattern is being formed. One more time, allow me to say that the pattern may not turn out to be a WXY wave pattern, but in our mind, as the way the price is now, it is okay for us, it's normal for us to prepare ourselves for a scenario where the price is forming a WXY wave pattern. Okay, so those are the key levels that you must watch for the potential, okay, resistance level for the S wave if the S wave is in place. But if the price breaks above the 138.2% Fibonacci extension level of the prior trend, we do not have any more X. We have now a trend that is developing. In that case, we'll start counting wave in a higher degree. So we'll call this one first wave of a higher degree, second wave of the higher degree, and if this S goes above the 138.2% Fibonacci extension level of the prior trend, that will constitute the third wave of a higher degree. But if it happens to be that we have a next wave that is developing, which means the W is completed, the S also is completed, now the price start coming down, yes or no? Right? Either it can come down from the 50% level or the 78% level, or at the 100% level, at the 138.2% level. In that case, my friend, all right, we'll start, okay, looking for the key level. So you do the reverse. You'll be watching the previous key level that I already mentioned as a support level as the Y is developing, except if you stop at the 50% level, start coming down, the Y wave can stop at the 61.8% level, or that X wave that did stop at the 50% level, yeah, and also all the way down to the end of the W wave. So this is how we prepare ourselves to trade, okay, the formation of the WXY wave pattern. So the first thing that we are able to identify is the W wave. There is one here. Now, we can have a different corrective wave. The price may print out a different corrective wave, but we are preparing ourselves also for a WXY wave pattern. In that case, we need to apply the Fibonacci price action strategy as I'm describing it to you in this video, and that will help you to time the market correctly. So if you did stop here, all right, you'll be watching this level. If you break below this level, you'll be expecting it here. If you count down here, you say, all right, this is the Y wave. Now you're expecting, okay, a bounce up, forming another X or a new trend. If you stop at the 61.8% level, all right, and come down here and find the support, you're expecting, so you see, okay, the Y is now completed here. You're expecting a bounce up either in X or a new trend. But if the S wave can go to the 78% level, even to the 100% level, even to the 138.2% Fibonacci extension level, before we may even see, okay, the Y wave. And, okay, after that, we'll be expecting another X wave or another trending phase. All right? So this will conclude the discussion today about mastering the formation of the WXY area wave pattern one step at a time, like a pro. One step at a time means that the pattern is not fully fledged completed. All right? It's developing, and we are preparing ourselves to trade it like a pro. One more time, doesn't mean that definitely the price will form a WXY wave pattern, but as the correction is underway, the price is moving, we prepare ourselves and we are ready for it. And if it's taking place, we have an edge and we participate in it like a pro, and we know exactly what to do and how to handle it like a pro. All right? So if you have any question or suggestion, put in the comment section, and of course I will be recording another video to answer your specific question. If this video has been truly useful to you, let us know by giving us the thumbs up. Then I know, all right, this video has been useful to 10 people, to 9 people. Though 100 people have watched this video, only 10 people have found it truly useful. That's a very good thing for me to know what's going on with this channel, alright? But if you think that this is another disappointment, boring video, feel free to mark it down. Then I know, alright, out of 5 people who like it, only 3 people dislike it. So it's not bad, alright? Or maybe out of only 3 people who like it, 6 people dislike it, then I know that this is truly a bad performance, putting me back under pressure to go back to my YouTube creator, a drawing board. However, if you think that this is an essential tutorial, do not hesitate to share it with your friends on Reddit, on Google+, on Twitter, and also on Facebook. So this will conclude the discussion today about how mastering, the formation of WXY Elliott wave pattern, one step at a time, like a pro. Until the next time, enjoy yourself and be very happy. We are the STW24 traders talking about mastering the formation of a WXY Elliott wave pattern one step at a time like a pro. Happy trading to you all and speak to you soon.